Welcome to the channel. Today we are going to review the stocks we have been following for quite some time. That's going to be Amazon, Apple, Tesla, and I'm also going to include Microsoft in the mix. Okay, so this video is for educational purposes only and it is not a financial advice. So you have to do your own work. All right, okay. So what we are looking at is the daily chart of the stock Amazon. If you look back at some of our videos, we had actually picked the bottom of this stock, and in fact at that time we wrote, is this a double bottom in Amazon? So I'll just quickly walk you through what we were watching. So really quickly, basically if we just zoom out and we look at this entire shaded area, this big one going from March of 2020 to the recent price action around here, around 9th of Jan 2023. This is all a big trading range, and here the Amazon stock was touching the bottom, very close to the 2020 March bottom. So that was the double bottom, possibly. And also, what we illustrated in these small boxes is that this stock actually goes into a trading range, and what it had been doing is that when it goes into a trading range, then the traders or the investors, they sell the top, they buy the bottom of the range, and then they sell the top of the range, they buy the bottom of the range to sell the top of the range, then it breaks out, then it goes back into a range, and this is another double bottom. And then we also had these one-to-one projections, is A B C D and a nested A B C D. So the blue line is the big one, and we have this small in black line A B C D. It was all coming into this region, forming a confluence level at this double bottom, which was a possible or potential double bottom. That's how we wrote it at that time, going back to March 2020. And in fact, what we have seen is just to blow up the chart, that price did in fact had a pretty good rally, and it rallied from around or what's this, 81.50 to around 98. So it's got about 13-14 bucks in it. And what we were also watching was this level of 96.60. Why? Because it was the 38.2% retracement level of this swing, and that's where that is where, like, the first initial test for this upward move comes in, and it's likely to find some resistance, which it seems to have done today. However, the price action is still constructive of that bottom. um, and also this blue line is the 20-day moving average. So what we are looking for is that perhaps this price is going to pull back a little bit and come down all the way to about 92, even to about $87 in that ballpark figure, and that's where the 20-day moving average is. So it's likely to find support from there. And what would be really nice is that if stock does something like this, it pulls back and then it makes a move higher. That's gonna be a pretty strong one. Okay, so let's take a look at Apple. Oops. Okay, so for Apple, we were watching this potential support zone, which it turned out to be a good amount of support around the 123 to around 121, 120 level. The reason was that we had this big ABCD in the purple line completing here. We also have this longer term channel line support, and then we had a few other elements coming in this region. So you'll have to watch our previous videos for the exact levels. So what seemed to have happened is price indeed found some good support, and it has rallied, and it rallied right into that area which we had discussed in our previous video about $136. That was the 38.2% retracement level of this swing high. So that's going to be the first test of this kind of move up, and it's possible that the price could find some resistance here, perhaps moves back into the range, and then we'll have to look at how the stock is gonna rally. What is good is that the price is trading above the 20-day moving average, so short-term traders will be looking for a move higher on the momentum basis, but it's still below the longer-term 200-day moving average, so that's a little bit a negative there. There is a possibility the stock could move back into this range. By how much? Let's try to see. So we'll be looking at about 132 to perhaps even 128 is a possibility. So that's, about the middle of this range. And then just like the Amazon stock, it would be nice if the stock does something like this. Pull. If it just retraces to about 132, that's a very strong thing. And then what we also have is a symmetric move, which is the last rally, which was about here. So this is what we think that once it takes out its 38.2% retracement level, or about 136, 137, that's going to be 146 is going to be the next target where it is likely to face the next major resistance. So let's take a look at Tesla. All right, so wow, so this Tesla stock, in from our archives, you can have a look at our videos when we were calling for the $105 per share level as the possible support, and even wrote down potential strong support. And the reason was we had a confluence of two things coming together, an ABCD pattern and a 78.6% Fibonacci retracement coming around 105. And looking at the price action, what we find is that actually price tried to take that level out but closed higher and rejected lower price, so that was nice. And then for a few days it kind of went sideways, and now today, after the holiday, it had a strong rally, and 38.2% retracement level comes around 138. That is the next level what we are looking at. What is really important is that, this is the concept of symmetry. So look, the previous rallies have been about this much, then this much, and what we really have to watch is that 136, 137, and around this 38.2% Fibonacci retracement level. If the price begins to take this level out convincingly, that's a very positive sign, because it means that the Tesla stock might have broken out of its bearish symmetry. So that's something to keep in mind. Let's take a look at Microsoft. So here, Microsoft actually had been trending lower into this channel for quite a while. So the whole of 2022, in fact, and it found a bottom around 3rd of November. And where it found the bottom from is actually it's a very nice pattern. It's like, if you look at it, it's a three drive to a bottom pattern, because what we have is we have drive one, we have drive two, and then we also have drive three. Okay, so and this is what the stock around that level kind of rejected the lower price, and we also have this channel support coming. And then what the stock did is it moved higher, and again the same concept, that this is how much the previous rallies had been, this much, around here this much, and this is there was this bearish symmetry there. It was not able to break out of its bearish symmetry. So and what it also did was it just went right up to the 61.8% retracement level from this swing, and that's where the price was just not able to take out the resistance. It was quite a lot for it, because the bearish symmetry coming in, the channel resistance line, and the 61.8%. Overall, it looks like the Microsoft stock is going for potentially a breakout, and it is in a bottoming process, because what it appears to have done is it has appeared to form a higher low. So I'll just remove some of these. Okay, so what it has seems to have done is that's the 78.6% retracement level. So I'll just put that down. Okay, so that's important because what it is doing is it could be in this ABCD up. So let me just clone this thing. Okay, and that is likely to take it above this level where it found the resistance before, and also potentially indicate the beauty symmetry. Um, so this is what we are watching these key stocks. And if you like our technical analysis and how we watch these markets, then please do subscribe to the channel and also hit that bell icon button. That way you will know when the new videos are coming out. Also, if you have any requests, then please do put it in the comment section, and I'll try to have a look at any stock or indices you want me to take a look at. Thank you very much. Good luck and good trading. Bye.